Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today, we're looking at Micron.
If you find our talks useful, please consider subscribe, like, and comment underneath. It really helps us figure out what you want to hear more of.
Absolutely. And today is a big one.
It is. So let's unpack this. We've spent, the last 2 years talking endlessly about processors. It's always about the brains of AI,
The GPU, the logic chip.
Exactly. But I feel like we're finally seeing the spotlight shift to the thing that actually feeds those brains.
Well, that's it. You can have the fastest processor in the world, but if it can't access data fast enough, it's just a very expensive paperweight.
Right.
That's where memory comes in. And looking at Micron right now, well, the numbers are telling us that the market has fully woken up to how critical this piece is.
Well, let's get right into those numbers because critical feels like, an understatement when I look at this earnings sheet.
It's a blowout quarter, for sure.
We're looking at Q1 fiscal 2026.
Yeah.
And honestly, explosion might be the right word.
I think so.
Okay, hit us with the headline revenue.
So, for the first quarter of fiscal 26, Micron brought in $13.64 billion.
$13.64 billion. Just to put that in perspective for everyone listening, where did they come from? What was this a year ago?
That is the wild part. A year ago, that number was $8.71 billion.
Wait, what?
Yeah, that's a 56.7% jump year over year. And even if you just look at the previous quarter, they're up over 20%.
That's massive. Usually in hardware, you're happy with single digits. 50% is like startup growth, not a legacy tech giant.
Right. And it flows right down to the bottom line. Their GAAP net income hit $5.24 billion.
Which is about $4.60 per share.
Yep.
And Wall Street was not expecting that, were they?
Not even close, no. The consensus was sitting way, way lower. Micron beat the earnings estimates by over $1.
A full dollar.
$1.01, to be exact. I mean, in this world, beating by a penny is good. Beating by $1 is a statement.
Okay, so they're making money hand over fist. But here's where it gets really interesting to me. The market is forward-looking,
Always.
We don't care about yesterday, we care about tomorrow. And the guidance they just dropped for Q2, surely it has to slow down.
You'd think so, wouldn't you? But no, the guidance is actually pointing to an acceleration. For Q2, they're projecting revenue of $18.70 billion.
Wait, hold on. They just did $13.6 billion, and they're saying next quarter we'll do $18.7.
That's what they're saying. That's a projected 38% growth, just quarter over quarter.
That is absolutely bonkers. That's not just growth. That is a rocket ship.
It really is. And it brings up the question, why? Why now? And the answer is pretty simple. AI servers are hungry, and they don't eat standard memory anymore.
Which brings us to the moat. Because usually when I think of memory RAM, flash drives, whatever, I think of a commodity.
Yeah, a race to the bottom.
I go to the store, I buy the cheapest stick of RAM, and I plug it in. Price wars are brutal. But looking at these margins, something has changed.
Everything has changed. You nailed it. Historically, memory was a commodity business. But look at the gross margins Micron's putting up now for their cloud memory segment. 66% gross margins.
66.
And their overall guidance for Q2 non-GAAP gross margins is 68%.
68% margin. That is,
yeah.
That's software territory. That's, I wrote a code once and sold it 1,000,000 times kind of margin. How are they doing that with physical hardware?
It's all about scarcity and complexity. We aren't talking about standard DRAM anymore. We're talking about HBM high bandwidth memory.
And that's harder to make.
Incredibly difficult. You have to stack memory chips vertically, connect them with microscopic through silicon vias, and package them perfectly. It's a whole different ballgame.
So it's not just memory, it's high-tech engineering.
Precisely. And right now, Micron has a technology leadership position in this specific type of memory. The AI servers, the ones running ChatGPT, Claude, all of them, they physically cannot function without HBM, and there just isn't enough of it to go around.
So supply and demand 101. Demand is basically infinite, supply is constrained, and Micron has the best product.
Correct. And that gives them pricing power. They can charge a premium because customers like NVIDIA or the hyperscalers, they don't have a choice.
You want the performance, you pay the price.
You pay the Micron price, that's the moat. Their IP in these advanced nodes protects them from competitors like Samsung and SK Hynix.
And you see the efficiency numbers, right? I saw their return on equity is sitting at something like 22%.
22.71% ROE, yeah. And net margins at a massive 28.15%. This has turned into a highly efficient money-making machine. They aren't just selling volume, they're selling value.
Okay, so they're making all this cash $8.41 billion in operating cash flow in one quarter, which is just mind-boggling. What are they doing with it? Are they just sitting on a pile of gold?
Not at all, no. In this industry, if you stop moving, you die. They're pouring that money right back into the ground.
Literally.
Literally. They spent $4.5 billion in CapEx, capital expenditures, just in Q1.
$4.5 billion in 3 months. That is aggressive.
It's necessary. They have to expand capacity. But the big headline here is the Singapore facility.
Oh, yes, I saw this.
Yeah.
The $24 billion investment.
$24 billion, that's the price tag for their new facility in Singapore.
That's a staggering amount of money for one building. I mean, you could buy a couple of small countries for that.
It's a massive bet, but it's a calculated one. This facility is specifically for NAND and HBM packaging. Remember the packaging, how the chips are put together? That's the bottleneck right now. This is designed to clear that bottleneck.
So they're preparing for a long-term shift, not just a short-term spike.
Exactly. I mean, look at the projections. The total addressable market, the TAM for memory, is projected to hit $100 billion by 2028.
$100 billion.
And it's growing at a 40% compound annual growth rate. So Micron is essentially betting $24 billion now to ensure they own a massive slice of that $100 billion pie later.
It's a bet on a golden era for memory.
That's a good way to put it.
It sounds great on paper, but we have to address the elephant in the room. Or maybe the bear in the room.
The stock price.
The stock price. Micron is up 244% over the past year. It's near all-time highs. And naturally, when something goes up that fast, people get vertigo. They start asking, is it too expensive? Did I miss the boat? Is this a bubble?
It's a valid fear. I mean, when you see a chart go parabolic, your instinct is to expect gravity to kick in.
And then you see a headline like this. EVP Sedana sells $10.7 million in shares.
Ah, the insider selling?
Yeah. I mean, if I'm holding the stock and I see the executive vice president dumping almost $11 million worth, that feels like a red flag. Is he bailing out?
Okay, let's pause and look at the context, because context is everything here. Yes, $10.7 million is a lot of money, but look at the stock performance. The price has tripled.
So you think it's just profit-taking?
Almost certainly. Look, if you had an asset that tripled in a year, wouldn't you sell a little bit? You know, buy a house, diversify your portfolio. It's just standard wealth management.
So it's not a signal of no confidence?
I don't think so. The key thing to look for is a cluster sale is the CEO selling, the CFO, the whole board running for the exits.
And are they?
No, it's mostly isolated. If everyone's running for the exit at the same time, I'd be worried. One executive cashing in some chips after a 244% run. That doesn't break the thesis for me.
Okay, that's fair. But it's not just the insider selling. We've had a bit of a tech tantrum recently, right? The whole sector has been volatile. I've seen some unusual options activity, lots of puts being bought. People are betting on a drop.
That's true. There's a lot of fear in the broader market right now. We have seen sector-wide selling in AI stocks. Investors are nervous that the hype cycle is maybe cooling off.
And the put options?
That suggests some big players are hedging their bets. It's like buying insurance in case the stock drops.
So is the smart money scared?
I wouldn't say scared, cautious. But on the other hand, look at the institutional ratings. Zach still has Micron at a #1 rank. The momentum score is a B. The big institutions, the ones moving billions, they're still interested. They see the long-term story.
So short-term traders are nervous, but long-term holders are steady.
Precisely. It's a tug and war between the stock has gone up too fast and the fundamentals are stronger than ever.
Well, let's look at what might break that tie. What's next on the calendar? We're in February 2026. What are we watching for?
The next big catalyst is the Q2 earnings report, which is coming up in March.
And what are the whispers saying?
Consensus estimates are looking for earnings per share, EPS, somewhere between $8.22 and $8.62.
$8.62 EPS in a single quarter. Again, just huge numbers.
Huge numbers. And given the AI strength we keep seeing and the fact that they're sold out of their best chips, I think they're poised for another beat.
And looking further out.
Yeah.
For the full fiscal year 2026.
This is where the analyst revisions tell a story. In the last 60 days alone, analysts have revised their EPS estimates upwards 10 times.
They can't keep up with the growth.
They keep realizing they're being too conservative. Right now, the forecast for the full year is hitting $32.90 per share.
$32.90 EPS. I mean, if you do the math on a PE ratio with that number, that makes the current stock price look a lot more reasonable.
Exactly. If they hit $33 in earnings, the valuation compresses very quickly. It's not expensive if they actually deliver that kind of cash.
What about the macro picture? Interest rates, the economy, how does that play in?
Well, data center buildouts are still happening at a feverish pace. That hasn't slowed down at all. And if we get potential rate cuts later this year, that typically favors semiconductor stocks.
Lower cost of capital for their customers.
Right. It makes it easier for everyone to buy these chips.
So, tailwinds on multiple fronts. But we have to be responsible here. What keeps you up at night regarding Micron? What are the risks?
Two things, really. First, geopolitics. We can't ignore the China factor. There's constant uncertainty with export controls on AI chips. If regulations tighten or if China retaliates, that disrupts the whole supply chain.
And Micron has exposure there.
They do. The Singapore fab helps mitigate that risk by diversifying their footprint, but it doesn't eliminate it.
And the second risk.
It's just pure volatility, the tech tantrum we mentioned. Look, even if Micron executes perfectly, if the NASDAQ decides to correct 10%, Micron will get dragged down with it.
It's a high beta stock.
It moves fast in both directions, so, don't put your rent money on it for next week. This is a volatile play.
Okay. It's time for the verdict. We've looked at the explosive revenue, the fortress margins, the big expansion, the insider selling fears. Where do you land? What's the score?
I'm giving this a bullish score of 9 out of 10.
9 out of 10. That is very high.
It is. But look at the fundamentals. Here's the elevator pitch. Micron is the essential enabler for AI. You simply cannot have this revolution without high bandwidth memory.
They own the bottleneck.
They own the bottleneck. They're selling oxygen in a room where everyone is gasping for air. Their financial health is pristine, record revenue, 68% margins, massive free cash flow.
And the strategy.
They're using that cash to cement their lead. So my approach would be to view any near-term volatility, any dips from this tantrum, as buying opportunities. But you have to have a time horizon through fiscal year 2027. You have to ride out the noise.
Buy the dip, hold for the cycle.
That's it.
So, stepping back for a second, what does this all mean for us beyond the stock ticker?
I was thinking about that $100 billion market projection, the TAM.
Yeah.
It makes me wonder if we're seeing a fundamental shift in computing history. For, 40 years, compute was king. It was all about CPU speed. Intel was the most important company on Earth. Then, NVIDIA.
And now?
Now, we might be entering an era where memory is king, because we have enough processing power to simulate intelligence. But we don't have enough place to store it and move it fast enough. Are we moving from a world constrained by thinking speed to a world constrained by remembering speed?
That is a fascinating thought. If memory becomes the new bottleneck of human progress, then Micron isn't just a chip company anymore.
They're the gatekeepers.
They're the gatekeepers. Wow. Well, on that note, we're going to wrap it up there. A massive look at the memory giant. Thanks for tuning in to Smart Wealth with Joshua.
We'll catch you on the next one.